How to start investing with $100. What if I told you that you don't need thousands of dollars to start investing? What if just $100 could be your first step toward building real wealth? Most people believe investing is only for rich people. They think you need a high-paying job, perfect timing, or insider knowledge. But the truth is much simpler. Today, I'm going to show you how beginners in the United States can start investing with just $100, step by step, without complicated language and without taking crazy risks. If you're new to investing, this video is for you. Why most people never invest. Let's be honest for a moment. Most people don't avoid investing because they can't do it. They avoid it because they're scared. They say things like, "I don't earn enough money. The stock market is risky. I'll start next year." But here's something important you need to understand. Not investing is also a risk. When your money sits in a bank account, inflation slowly reduces its value. Your dollars buy less every single year. So the real question isn't, is investing risky? The real question is doing nothing riskier? What investing really means. Let's simplify investing. Investing means putting your money into assets that can grow over time. When you buy a stock, you're buying a small piece of a real business. That business sells products or services, earns profits, and grows. When businesses grow, investors benefit. You don't need to understand complex charts or financial jargon. At its core, investing is about owning productive assets and giving them time to grow. Why $100 is enough? You might think $100 is too small to matter, but investing success is not about how much you start with, it's about time, consistency, patience. $100 invested today can grow into much more over the years. The most powerful factor in investing is time, not talent. Starting early with a small amount is far better than starting late with a large amount. Compound interest explained simply. This is where compound interest comes in. Compound interest means your money earns returns, and then those returns earn even more returns. Imagine you invest $100 and earn 10% per year. After the first year, you have $110. The next year, you earn 10% on $110, not just your original $100. Over time, this creates exponential growth. At first, the growth looks slow, but after many years, it accelerates dramatically. That's why investors who stay consistent for decades often build significant wealth. The best place to invest $100 in the US. Now let's talk about where beginners should actually invest. For most beginners, the best option is not picking individual stocks. The best option is investing in ETFs. ETF stands for Exchange Traded Fund. An ETF allows you to invest in many companies at once with a single purchase. S&P 500 ETFs. One of the most popular ETFs follows the S&P 500. The S&P 500 includes 500 of the largest companies in the United States. When you invest in an S&P 500 ETF, you're investing in companies like Apple, Microsoft, Amazon, Google, and many more, all at once. Instead of betting on one company, you're betting on the long-term growth of the US economy. Historically, the S&P 500 has delivered strong returns over long periods of time. Total market ETFs. Another beginner-friendly option is a total market ETF. This type of ETF includes large, medium, and small companies across the entire US stock market. It offers even more diversification and is excellent for long-term investors. Both options are simple, low-cost, and beginner-friendly. What to avoid as a beginner. Now let's talk about what you should avoid. Many beginners lose money because they chase excitement instead of following a plan. Avoid day trading. Avoid meme stocks. Avoid trying to get rich quickly. Social media often shows people making fast money, but rarely shows the losses. Long-term investing may seem boring, but boring works. The goal is steady growth, not overnight success. Step by step, how to start investing. Here's a simple plan anyone in the US can follow. Step 1. Open a brokerage account with a reputable company. Popular beginner-friendly options include Fidelity, Vanguard, and Charles Schwab. Step 2. Deposit $100. Step 3. Choose a low-cost ETF, like an S&P 500 or Total Market ETF. Step 4. Buy the ETF and hold it. Step 5. Add more money whenever you can, monthly, quarterly, or yearly. That's it. No constant trading, no guessing the market, no stress. The importance of consistency. Investing is not about timing the market. It's about time in the market. Markets will go up. Markets will go down. That's normal. What matters is staying invested and continuing to contribute over time. Consistency beats perfection. Even small monthly contributions can add up to significant wealth over decades. Common beginner mistakes. Let's quickly cover some common mistakes. Checking your investments every day. Panic selling during market drops. Trying to copy other people's strategies. Successful investors focus on long-term goals, not short-term noise. Patience is a skill, and it pays very well. Long-term mindset. Think of investing like planting a tree. You don't dig it up every week to check if it's growing. You water it, you give it sunlight, and you let time do the work. The same applies to investing. The longer you stay invested, the more powerful compound growth becomes. Final motivation. You don't need to be rich to start investing, but investing can help you build wealth over time. Your first $100 is not about making quick money. It's about building a habit that can change your financial future. The best time to start was years ago. The second best time is today. Call to action. If you found this video helpful, make sure to like it. Subscribe for more simple, beginner-friendly investing videos. And comment below, what would you invest your first $100 in? Thanks for watching, and I'll see you in the next video.